Good morning, good afternoon, good evening, folks. Michael Zuber, one rental at a time. It is Friday, July 8th, and I hope you have an amazing day. I hope you have a great Friday, great weekend, great July. It is summertime, barbecues and sun, vacations, all that good stuff. Hope you're having a good day. So we got the July or June jobs number. It was a blowout number. Expectations was 250. I think it came in at 372. Again, we live in an environment where I'm afraid good news is bad news and bad news is good news. I think we are at an inflection point in a lot of areas, right? I think we're going to get a Fed rate jump of 75 basis points. I think we have a lot of earnings that are going to either flat out disappoint or more likely hit their numbers but lower expectations. As we have talked about a couple of times on this channel, the bottoming process or of a bear market or recession is not fun. It's not easy. It's generally not a V-shaped bottom like many folks experienced in March of 2020. We have seen a collapse in multiples. That feels just about done, or phase one. However, we have two more left. I believe, and I've said here a couple of times, I have an expert that spent 10 years on Wall Street, and I was kind of rude, frankly. I think Wall Street analysts suck. I don't think they're doing their job. To think that the S&P 500 is going to go up 10% this year after last year's record year is insulting to my intelligence. And then to bolt on top of that 9% next year, are you freaking kidding me? Who is driving the bus? What kind of drugs are you on? So very annoyed at that fact. I think that's going to hurt a lot of folks. And of course, if you lower earnings with a lower multiple, we likely have more pain to go. And then the biggest pain that I see in the stock market is I think there is a unrealistic expectation of two things. One, I think there is a general understanding that we're not at the bottom yet. I think there's a general understanding. But I do believe that a lot of people believe that, hey, once we hit the bottom, it'll bounce and it's off to the races. And frankly, if you look at 2020 and 2018, and that's your only experience, hard to argue, right? Buy the dip worked. Having experienced the Great Recession and more specifically the dot-com craziness and watching dead money sit there for years, watch a bottoming process that was 6, 8, 10 quarters, I don't think a lot of people are ready. And then to the stimulus ballers who I've been talking about, both from the PPPs to the unemployments to this and that, it's going to be painful. A lot of you balled out and bought toys that you weren't ready for. When people give you money, you feel rich and you do stupid things. Instead of saving it for a rainy day or maybe investing it in your business, you bought a Ferrari, you bought a Rolex Daytona, you bought a Petit Philippe. Just talked about this morning on the Daily Financial News that we are already seeing Rolexes and expensive watches roll over. Folks, if you ever wanted a luxury toy, a purse, a watch, cars, whatever, there's going to be a lot of need to sell. There's going to be so many repossessions. I wonder how many Ferraris will be repossessed in the next 12 months. It's going to be bananas. I read a report the other day that the average car payment is $1,000. That shocked me. The last 2 years, money has rained down on fools. And unfortunately, as Warren Buffett always says, we are about to see who is swimming naked. I think this comes to real estate, right? I'm a real estate guy. I've invested for a long time. I think there is plenty of pain coming to the real estate market. I've been very vocal about it. Yes, To the good operators with the great properties, your Airbnb or VRBO or short-term rental will probably be fine. But get out of your own way. You have to admit that there's been a flood of marginal properties by marginal operators who came to Airbnb because they thought it was easy. Real estate of any ilk is not easy. It's just not. It's not the easy button. It's not sit it and quit it and just hope it happens. Man, I think there's plenty of pain coming to syndications. I was selling apartment buildings in 2019 because cap rates in my market normally at 7.5, we're trading at 6. I sold on purpose. Little did I know that we would have a historic pandemic and cap rates would go from 6 to 4.8. I lost out on $500,000 at least. But let me just tell you this. Now that the real world is setting in and the Fed is doing its freaking job, that 4.8 is going to go back to 6. And I guarantee you it's going to go back to 7.5 or 8. Whoever bought that property last, going to be in trouble when it's time to refi. And that's a small apartment building. You get into these bigger apartment buildings where you're a limited partner, on $100, $200, $300 million deal, and your operator is forecasting record occupancy, record rent growth, record collections. I've been doing this a long time. It all reverts to the mean. In fact, there's a video coming out at 9 a.m. today with Jonathan Twombly. Actually, no, it's 11. I stand corrected. 11 a.m. today, where we talk about this. We talk about all the pain coming to multifamily. And then lastly, I think there is no question there were some boom towns. Boise, Idaho is one I've talked about for 6 or 9 months. That is just set up to not do so well, right? The excess capital that came from Californians or New Yorkers or whoever flooded to a market at the same time that wasn't ready. Now you're boomeranging either back or maybe to Florida. Real estate's going to have its pain. There will be some pain, and there will be some operators that get hurt. Money rained down on fools across all assets. And it is time for the good investors like you and I who do the work, who are not afraid to write offers under list, who are not afraid to ask for closing costs, who are not afraid to ask for the seller to buy down your rate. We are going to do some amazing deals. Do me a favor. If you're lucky enough to be in a situation where you can do more than one deal in the next 2 years, please make the second deal better than the first. You and I have no idea where the bottom is. You and I have no idea where the pain is. I'll be speaking with Brian Lebo later today about Las Vegas. Brian Lebo's been on the channel a couple of times. We did a video together 2 weeks ago talking about the party is over. The party's over in Vegas. Transactions down 26%. Vegas to me is always the canary in the coal mine. It always goes up the highest and then it crashes the most. Brian has opinions about what's going to happen in the short and long term, and we're going to talk about those. I'm excited for what is coming. I do the work every day. I'm not in a rush. As you know, if you watch my channel, I'm actually spending marketing. I'm marketing, pushing the idea of a housing crash. I'm marketing these to all the owners of duplexes, triplexes, and quads. I believe the greatest opportunity in the short term is residential. I believe the pain in my market will come to multifamily, and I will do what is in this book. If you get this book, you will hear about phase 2, where we 1031 8 houses into 80 units. I plan to do the same thing. I believe short-term pain or short-term opportunity is in residential. I believe the debt structure in commercial will allow them to limp along until next year. And then it's time to go shopping. I hope to 1031 out of dozens of singles or duplexes or quads into commercial, just like last time. Do me a favor. If you have this book and you haven't left a review on Amazon, can you do that for me? Sorry, kind of selfish request, I know. But just right here, I'm giving you an hour of my life. Maybe you can give me 5 minutes and write a review. I'd love to see over 1,000. I think we're getting really close to 1,000. That would be cool. And if you really want to have some fun, take a selfie with this book and post it on Instagram. Send direct message me if you're shy. I have a whole cork board with pictures of selfies. So if you want to be on my wall, go ahead and do that. Thanks. All right, folks. So again, I just gave a little time. This is really a Q&A session. I'm going to scroll to the top here and see what kind of questions you all have. We always go top to bottom. Hey, Jeffrey, how are you? Hope you're feeling well, man. Chester, good morning. Nessie, good morning. Hopefully I'm saying that right. Santi, good morning. Catherine, good morning. Roldan, good morning. Izzy, good morning. Here we go. Rob. The daily financial news has to have a hostage crisis day count. It's day 3 and the lumberjack is still employed. Man, you guys have some awesome. That's good. That's good. I'm gonna tell them that. Yeah, money is not respected when it's free, Jeffrey. That is absolutely. You can absolutely give me that quote. I will take that to the bank. Chester, price to earnings collapse, then earnings collapse. Then the long, slow, painful search to the bottom. Yeah. The bottom, even if we find a quote unquote bottom, you can be on the bottom for a long time. The base or foundation or the floor or whatever you want to call it, it really could be a year, year and a half. It could just, we've got to regroup, right? We rained 8 trillion or 90 trillion or whatever the freaking heck the number is on people. Now we've got to extract that. It's not going to be a 1 day, 1 week, 1 month, 1 quarter thing, at least not in my opinion. The experts guess. They're never right. So let's guess. Absolutely. Why not? Let's have some fun. One of the things that I love to do, because I've been doing the daily financial news for 30 years, most of that time just for myself. But I am always trying to look at the dominoes, make a prediction, because I'm trying to see, am I getting better? You know, when you watch my channel and you see me make a prediction that's a month, a quarter, a year out, I have been doing that for 30 years because part of my job for my family is to look around the corner. I don't want to know like what's right in front of me. I'm trying to make predictions around the corner, and it's hard. It's freaking hard. Doing it for 30 years and making lots and lots of mistakes, you get a little better. I'm not great. I'm okay. I'm probably better than most, but I get stuff wrong all the time. Think about today. We got a June jobs number. And if you actually watch my channel a lot, you know, a week ago, I'm like, ooh, I don't have a good feeling. I don't know. I just don't know. And then I took the lower. I think I went 238 on 250 and it blew it out. It came in at 372. That was a miss. What did I miss? Well, it is summer, right? Summer is a month where you could get a lot of extra services employment. You know, there's a lot of this. Although we are seeing, if you look in the numbers, I don't know if anybody saw this yet. I just read it like 5 minutes ago, maybe 10 minutes ago. Looks like white collar jobs are really hurting. This is something I remember from the 80s. I told a personal story, I don't know, a month ago. My father was essentially an office worker, and the early 1980s were so bad. My father had to take a day job, stuccoing a house. And let's just say my father's not very handy. I think that's a kind, very kind statement. But you had to do what you had to do. So one of the things that I think is coming over the next 5 to 10 years is we are going to see a pivot. And I think we should. I think it has to happen. I think it's a great thing where our economy starts to make stuff. This push for a college education and underwater basket weaving goes away. There's nothing wrong with a trade. In fact, trades make a great living and you can build a great business. I think we are going to see increased percentages in what is often called blue collar services. They're 6-figure jobs. I mean, they are. So yeah, I think there's a lot of change coming to our economy. And when change happens, it's uncomfortable. It's painful. And you get white collar folks who should never do blue collar things, stuccoing a house and coming home that day beat up and tired and like, can't do that again. Yeah, So yeah, I think a lot of this stuff is coming. Todd, hi Mike. Question: if my buy box has properties with 1 or 2% yield, what should I do? Well, it's kind of a long answer, but I don't know where you are. If you are in the first 60 or 90 days, keep going. There is no reason ever to get a second buy box if you're in your first 90 days. If you're following what I teach and talk about, the first 90 days is about learning a skill. It's repetition. It's consistency. It's not rushed. It's getting a little bit better every day. If at the end of 90 days, Todd, what you can tell anybody who asks intelligently, my average buy box is 1 to 2, a good or great deal is 3 or 4. At that point, you have permission to ask, should I go somewhere else? But this is not, I do not advise, suggest, or approve. Oh, I've looked at my buy box for 10 days. The deals suck. Let me go look at another one. Oh, those deals suck. Let me go look at another one. No, for me, I'm trying to teach you a lifelong skill. The skill of real estate investing is not hard, but it is a skill. It takes focus and repetition. So hopefully that is clear. If you're in your first 90 days, keep going. You're not, first 90 days, who cares? I don't even care if they're negative. Who cares? After 90 days, you can ask that question. So let's assume, Todd, in your case, it's more than 90 days. Well, that's up to you. I remember investors who were buying in San Diego years ago, part of my program, and their buy box was San Diego. Horrible returns for most people. But they're like, Michael, we're never going to do out of state. We want to self-manage, and we want to be within 45 minutes of our home. So for them, a great deal was 2% because San Diego is full of negative cash flow, or what I call alligators. So again, you got to know thyself. If for whatever reason your market is where you have to be, friends, family, network, control, whatever, and average is 2% and you're comfortable with that, then your job, Todd, would be 4%. If average is 2, then go do 4. And oh, by the way, Todd, I did a video earlier in the week, I think, turning a 2% deal into a 6% deal. You are a buyer, you are an investor, you have more power today than you probably know. What happens, Todd, play with your spreadsheet. Erase closing costs. Get the seller to pay closing costs. Todd, get a 0.5 point rate deduction. See what that does to cash flow. There's lots of things that you could do when you really understand financing, and that's what we talk about in the course. So hopefully that's a long-winded answer, and I touched on your area, Todd. Investor Wealth, good morning. How are you? My average car payment is 0. I pay cash for cars. Yep, I do too. Wow, I thought my car payment of less than half that was expensive. Yeah, can you imagine a car payment of $1,000? Lots of stimulus ballers. I mean, when you give them money, you tell them they don't have to pay their mortgage, they ball out. Time for repossessions. It's coming. Mike, please elaborate on any deals you have done this year. I've not done any deals this year. I am being very proactive on duplexes through quads. I am marketing to owners. I'm going to do the 50-40-90 or 50-40-10. I do not, I'm seeding, I'm spending thousands of dollars every month marketing. The market is at a transition. You've heard me talk about July 20th being an earthquake. I believe sellers, or owners, I should say, owners aren't going to be open to 50-40-10 until October or November in my market. So that's where I'm looking to do. I look at their deals every day. I've looked at a dozen wholesale deals in the last 2 weeks. They are garbage. Wholesalers in Fresno, wake up. You are pricing stuff like it is January, and it is not. It is July. The market is different. You are pricing deals where you think I might have 10 or 20 grand in profit. You're wrong. I have 30 or 40,000 in losses. Wholesalers in Fresno, if you don't wake up, you're going to go broke. I've talked to a couple of agents with listings. If you're an agent in Fresno, California, and you have an owner with a lot of equity, let's talk. I will give you both sides of the commission. But frankly, at this point, who asked that question? Chris, I am being very focused on doing a great deal. I want 9 or 10% yield, which is, I haven't done a 9 or 10% yield in Fresno in 4 years, probably 3 years for sure. I'm being very picky. I want to do a lot of deals and I'm willing to wait. So hopefully that makes sense. But Chris, I am looking every day. I have probably written, I'm starting to write more offers. I wrote, what is today, Friday? I think I wrote like 6 or 7 offers this week. That is, and I expect to write more offers every week going forward. But a lot of them are still, all of them are under list price. I've now given up on 15 days on market, Chris. That's a change. I think 2 weeks ago, if you watch my channel, you know I no longer look at first day listings. I was, Business Insider did an article on me where it was 15 days. Now I'm looking at 30 days. Chris, I promise you, I will only do deals with motivated sellers. Lots of people in my market want to sell. They don't need to sell. Call me a jerk, call me cheap, call me whatever you want. I am not going to buy a house, a duplex, or a quad from somebody who wants to sell. I am going to find that needle in a haystack and find someone who needs to sell. I want to use the 50-40-10 because it'll allow me to take my stack of cash and do more deals. Yep. Nita, good morning. Should I refinance to buy an Escalade? Use that Escalade for Turo for a profit? Not my ball of wax. I laugh and chuckle. I don't know. First off, I would never let anybody drive my expensive car. I think that's nuts. Have you ever rented a car? Have you rented a car? I used to be a traveling salesman and I rented cars every week. And let's just say I treated that car like garbage. Do you think I'm going to let some idiot off the street rent my 6-figure car? No freaking way. People are idiots. People are stupid. People are going to freaking jump on the V8 twin turbo and freaking blow my tires away. Not happening. But hey, you want to do you? You want to go find this new economy nonsense BS? You do you. I would never add debt on my house to let somebody else wreck my car. That's not my thing. But I suppose in this new economy where I'm a boomer and there's this whole new way of making money that millennials think is easy, I guess that's one way. I would never do that. I would never take money on my house to get a debt. I would never let somebody drive my expensive car. Not my thing, but I'm old. I don't get the sharing economy, so probably not the right guy to ask because I'm not going to give you the answer that you're hoping for. See Mike's YouTube video about how he tweaked a deal. Yeah, from 2 to 6. Yep, I did that. Very easy, very subtle. Basically, I made the seller pick up a couple of costs and my 2% turned into 6, like that. Pretty simple. Just finished your book and audio course. I'm very excited to sign up for the full course. Enjoy the process, focus, daily discipline. The biggest thing you'll see in the course, certainly in the beginning, is you need focus. Real estate has lots of ways to make lots of money, but new investors need focus, daily discipline, learn average. Yeah. Good morning, Mike. Saw literally right before my eyes everything you say. 6-bedroom property across my house went on the market at $850. 10 days later, price reduced to $750. 10 days later, withdrawn. Damn, I'm good. Folks, this is why July 20th is going to be very interesting. We're going to see an earthquake. And I say earthquake because I'm in California. I don't know what else to call it. Tornado, hurricane, whatever. And it's going to be bad. You're going to see buyers run away. You're going to see sellers run too. And you're going to get a whole bunch of nonsense. You're going to get a wish price at $850. Then you're going to get, okay, we'll do $750. And then it's like, nope, honey, I guess we're staying put. Man, the real estate data is going to get just so noisy. The only thing I can confidently tell you is real estate transactions are going to crash. Real estate or the housing market will likely cause a recession. I do not believe Q1 and Q2 will be called a recession regardless of the GDP number. Even if they're both negative, it'll be 1947 on repeat. But Q3, Q4 will be. Q3, Q4 are going to be ugly. Real estate, the housing market all by itself could take 4% off GDP. Housing is 15% of GDP when you add it all together. If you whack housing transactions 30 to 50%, and then you turn off the cash out refi with 80% of loan refis, there is so much money being just sucked out of the market. Oh, it's going to be bad. It's going to be so bad. Nessie, have had numerous cards from companies wanting to short-term rent my long-term rental for 30% of proceeds. I get them every month. I bet they disappear. Absolutely. There was a short-term rental company that I talked about yesterday or the day before. I think it was called Wanderlist. I think that's what it was called, Wanderlist. They raised $26 million and pissed it away. They were doing essentially, Nessie, what people they were basically coming to you saying, let me run this. $26 million pissed away. They're now bankrupt. All right. You've asked that question before. Now you get blocked. Hide user. There we go. I hate repeated questions. You're a troll. Okay. You talk about growing your network. How do you do that? How do you know you are talking to the right people? It feels like I'm meeting people, but they don't reach back out. Again, it's rule number 3, right? Rule number 3 on this. You just keep doing it. I don't know, you kiss a lot of frogs, you shake a lot of hands. You just keep at it. And some people you meet are total dogs. Lots of people you'll meet are flakes, but you never know who's going to be that long-term relationship. The easiest thing to do for me is ask for referrals. Who else is doing what and what in my area? And by the time you ask the 15th or 20th person, you're going to start to hear names repeat. When you start hearing names repeat, those are the people you target. Like if you heard the same agent 3 or 4 times, you want to meet them. If you heard the same investor, you want to meet them. For example, every other Sunday, we are lucky enough to talk to the number one investor in my market, Jason Pritchard. Jason Pritchard runs an operation that is amazing. I had to reach out. I had to get referrals. I had to get introductions. Now we're friends. I gave him value. His story is in my book. His amazing story is one of the 15 conversations with millionaires. He sent me a nice note saying, thank you for including me, this, that, and the other, right? Add value. And that's how Jason now is on our channel every other Sunday to talk about his business. Just keep at it. And it's just like in 2020, I told you I wrote 100 offers and got nothing. You just got to keep going. Just keep going. Follow up, send notes, ask for referrals. You just never know where that relationship will come from. Ask Lebo about Palms Place. Okay. I think we've talked about the Palms before. It was non-financeable the last time I checked, but I wrote it down. We'll see if we get there. We have 45 minutes, so it might be tight, but I will see if I can. Are you ever going to start hosting your own live events? So kind of 2 answers. I don't. So the first thing to say is I've already promised, because Dion from Dion Talk loves spending my money. Dion challenged me. When we get to 50,000 subscribers on YouTube, I'm supposed to host an event, which I agreed to. So when my YouTube channel gets to 50,000 subs, we're going to host an event probably in Vegas. It's just an easy market for people to fly into, hopefully without connections. My intention, again, this is all subject to change. I am willing to spend $10,000 of my own money. So again, Dion loves to spend my money. I will probably get a couple of sponsors to chip in another $1,000 or whatever it is. My intention is to host this event at no cost to the attendees. That is my hope on July 8th. I honestly have no idea what it's going to cost me in Vegas. There is a chance that we have to charge a nominal fee like $99 for a 1 or 2 day event. So I guess the answer is, yeah, we're going to do one at 50,000 and we'll do a second one at 100,000. I do not know if they will be like, I don't see that being a profit center for me. In fact, I see losing money. But yeah, I think hosting an event at 50,000 subs would be a lot of fun. So yeah, I will do a live event at 50,000, I guess is the long answer. Mark, how do you handle tenants who ask for month-to-month or 6-month leases because they are looking to purchase their home? Mark, in this market, I say no. You got to remember right now, rentals are hot. So in this market, my answer is no. Everything's a year or 2-year lease today. However, I have been doing this for 20 years. In most of my career, Mark, we would do a minimum 6 month, minimum 6. I don't do anything less. Minimum 6 month. We might do double deposit because I want to make sure the unit's put back in the right shape for the next one. So for most of my career, probably 17 of 22 years, Mark, I accepted a minimum of 6 months if they communicated that upfront. But the last 2 years or so, no, I've just said no. We don't have to. We have dozens of applicants for every vacant unit. So today I say no. Hey, Paul, good morning. How are you? I can get 45 payment, one payment for what year? So you can get 40. I think what you're saying is you can get 45-year payments. Basically, I'm not understanding, but basically you're saying, I think what you're saying, Santi, is you can overpay for a property if you get great terms. Absolutely. That's what I keep trying to tell people. I have overpaid for properties several times. I still remember that one damn house where the seller insisted it was worth 125 and I thought it was worth 100. And he just insisted. So we did a deal where I got great terms, and I'm sure he told his friends he got some sucker to pay 125, but he gave me great terms, so it was fine. Would you tie yourself with a purchase price that does not make sense at all if terms let you cash flow yield more than 10%, but you will not be alive to pay the property off? I don't know. There's a lot in that. So first and foremost, I'm not against overpaying. Doesn't matter to me. My intention is to hold things forever. So that doesn't bother me. But that last statement, again, not be alive long enough to pay the property off. I'm not really sure what that means. Like if you think you're going to die in 5 years and maybe stick your kids with an overinflated property, that's probably not the right thing to do. But if you're saying, hey, I got 45 years and I'm only going to live 30, then probably doesn't matter. I mean, that last little comment throws me off a little bit. I think you always got to do the right thing long term. You know, if you're only going to live a couple more years, I don't think you'd want to set your heirs up for a problem. But again, for me, folks, it has always been about yield and holding forever. I don't really care about price. Hey, Jeffrey, good morning. How are you? Yogi Bear, I love that guy. Oh, you said it. Yep, know the owner. Yep. Can you explain what it means that economics isn't an exact science? I remember the talking point in class I dropped years ago. Yeah. So economics, my field of study, my 4-year degree is in economics. It is essentially a science built on looking in the rear view mirror, right? This big, looking in the rear view mirror at facts, and making predictions about the future. This is why when you're in economics, and if you really choose to study it versus take it as an elective, you find yourself, because again, you take economics classes, man, I must have taken 15, 12, 15 various economics classes. What you really find out once you get past micro and macro and all of that is you have to find your thing, because there is so much going on in the economy. You have to find your thing, because you have to, like, the economy is this big painting with all of these colors, and very few people are smart enough to study the painting. Guys like me, I have to study a piece of the painting, or maybe a color. Like I have to study the blues or the reds. And for me, it really came down to the consumer. That's my thing. I study the consumer. The consumer is a fascinating group of people. The consumer is important to me because it's 68% of the economy. The consumer is important to me because there's consumer sentiment and then there's consumer actuals. The consumer often makes short-term decisions that have long-term impacts. The consumer is a herd and frequently does stupid things. The consumer, man, they are fascinating. So when you study something as fascinating as the consumer for 30 years, you start to look for early indicators, leading indicators, lagging indicators, and yeah, they're pretty predictable. They don't surprise you very often because they all move together. So were the stimulus ballers predictable? Absolutely. You hand out $75,000 a year, you tell them not to work, they are going to ball out. I remember on the summer of 2020 going to our local mall and seeing lines at the Gucci, the LV, the Rolex stores. I'm like, where the hell are these people getting money? And I'm like, duh, they're being paid to sit on the couch. And guess what? Stimulus ballers who did not respect money, who did not save the money, balled out. And now, as we talked about on the daily financial news, they are selling their Rolexes at a discount. Next up, the purses. Next up, the cars. There are going to be so many Ferraris and Bentleys repossessed from people who did fraud or bad activities on PPP loans. It's going to be amazing. Yeah. So yeah, that's what it means. Economics is really odd because it looks at facts, like documented, unquestionable facts, but then tries to leap into the future. Hence, not an exact science. At least that is my opinion. Good morning, Michael. Thank you for all you do and great content for subs. I'm in Vegas, excited for the next. Oh yeah, man, Vegas. Woo! Yeah, do your homework. I think Vegas is going to provide a lot of opportunities. I think Vegas is going to be like a donut. Yeah, kind of like a donut. Because I think the low end, I don't think there's much pain there. I think the median and above, pain. I think new home construction, pain. I think what Brian Lebo is saying is like the 750 to 1 million, pain. I don't know about the ultra luxury. It'll be very interesting. Yeah, Vegas is going to, again, I've said for years, right? That's why Brian Lebo's been on my channel a dozen times. Vegas is the canary in the coal mine. If you can figure out where Vegas goes, especially on the downside, you can start to see other markets. Vegas is going to be fascinating. I think every low wage place is still hiring fast food, etc., but those aren't jobs that pay for anything more than rent a room. So jobs are up, but wages mixed is down. Yeah. It's going to be the second half is going to be fascinating. Yep. Anita's been blocked. Morning, Dividend Dave. How are you? Good morning, Chris. How are you? Wow, you rent out your tractor. Cool. Like tractor, like plowing and stuff. That's fun. Read the book before course, gave my wife and I a great perspective. Awesome. I'm glad to hear that, Jeffrey. I know Anna Kelly does beach rentals. What are some tips on looking for a property on the beach? Does it have to be on the beachfront or can it be general area, like a few blocks from the beach? Again, this is not an area I have any experience in. I'm going to give you one well uninformed opinion. I would definitely ping Anna Kelly to get her opinion. I believe with what is coming in the short-term rental game, I'm guessing that's what you mean, Chris, short-term rental. It is going to be boardwalk and park place. Beach, and that relates to beachfront, not beach adjacent, not beach kind of, not beach walking. I believe what's happened over the last couple of years and why Airbnb pain and VRBO pain is coming is more and more people couldn't afford beachfront, but they got beach adjacent, beach close, beach kind of. And the quantity is exploding, and a lot of you are going to lose your ass. Real estate investing is not easy. The gurus were pitching Airbnb in the best year or two to do it. Now I get numbers from people across the country, folks. It's not good. There are going to be people that lose their homes because they overpaid. They relied on a business model that was YOLO, the perfect time. And I mean, Adrian, right? Adrian, this week, he has 4, I don't know, I think he called them riverfront properties up in the mountains. Again, I'm just going based on memory. I guess he called them waterfront, which I think means river. And he's had to take rates from 450 to 180 and still not getting tenants. If you overpaid for a property up there because you believe the bullshit numbers at 450, you're going to go broke. So again, one uninformed, unexperienced, probably should keep his mouth shut, but hey, everybody's got an opinion. I think beachfront means beachfront, my opinion, or waterfront means waterfront. Yeah, well, again, I see price drops in Orange County dropping. I talked to Adrian. He sells in Orange County. He's been telling us that for weeks. Yeah, it's going to be very funny. It's going to be very interesting in Orange County, like Los Altos, like San Francisco. How many people want to sell versus need to sell? Because if you want to sell, you throw it out at some BS number, you wait 10 days, you lower it, and then you take it off the market. But if you need to sell, because maybe you worked at better.com or you worked at one of these mortgage companies, then yeah, you got to sell. And woo, we'll see what happens. Ken or Mike, how much rent can raise before tenants can't pay? Again, that's a very blanket statement. I would tell you in most of the country, rents are probably already near tipping points. There's obviously, I mean, that's a blanket question that I have no idea on. I could tell you that 20% rent increases year after year after year is not good. If you watch my channel, you know that I think rents are going to go down in apartments. Again, that's not popular. Not many people are saying it. In fact, I think I'm the only one saying it. I believe in a year or maybe 18 months, rents in apartments are down. I think they'll be up in houses, but down in apartments. So I think rent, generally speaking, is already at a tipping point. And here's another thing that people don't understand. I have lived in a household where we didn't have enough money most of my life. Most of my life, this was me. And I remember my mother, who was responsible for paying the bills, every month had to make a choice on what bill to pay. And let me just tell you, rent or the mortgage was not priority one. It's just not. That's why I believe multifamily is going to be wrecked next year. Because if you live in an apartment, you're not going to pay your rent. You're going to do food. You're going to do gas. You're probably going to do your car payment, your cell phone. But you will take, if you're in California, 60 or 90 days and ghost the landlord, and you'll go spend time on a couch or somewhere else. Rent's a problem. Again, this is not across the country. Some cities, plenty of room, but generally speaking, you can't have 20% on top of 20%. Not good. Not okay. I'm looking to buy a duplex or a fourplex. When will be a good time to start looking for a good opportunity? Sandra, again, don't know your buy box, don't know your city, don't know your state. All I can tell you is it's always a great day to do a great deal, but more importantly, you must start looking. You got to get prepared. If you haven't looked at your buy box for 90 days straight, you're late. If you wanted to buy a duplex or a fourplex in my market, you'd have to spend 90 days, and then maybe you'll be informed. This is not about, hey, I got the money, I don't know, September 15th, I'm going to start looking then. No. If you think you're going to be ready September 15th, you start looking now. Just because you look now doesn't mean you're wasting your time. No, you're sharpening your skills. Your job, Sandra, is one thing. You must learn what an average yield is in your market. And until you can intelligently tell me what average is, you are not to write an offer. Most of you, and I don't know if this is you or not, Sandra, so this is for most of the audience, you want to do it, but you haven't done the work. What are my rules? Number 1, focus. Number 2, daily discipline. Most of you fall down at rule 1 or rule 2. If you don't have these rules, go on my site. You can get them for, I think, as cheap as $10, or if you want like a picture frame, it's like $90. Go get the rules, look at them every day. Do the work. Hey, Mike, is there any more news about 50,000 sub meetup? Yeah, the only thing I can tell you as of right now is we will do one. Dion loves spending my money. I am willing to spend 10 grand. I think we're going to do Vegas. That's all I know. We're still 16,000 away or whatever it is. But yeah, I hope this channel takes off. We come every day. It would be great to do this into the year, maybe early next year, but 50,000, we will do an event. I will spend 10 grand somewhere, somehow. Dion loves to spend my money. This guy, I tell you. If the Fed actually does the right thing and raise 75, when might home loan interest increase too? So home loans increase generally ahead of time. I think mortgage rates will jump way before. There's not a 1-to-1 correlation. So mortgage rates will be up long before that. So I haven't looked today because I've been talking to you. I suspect they're up today. After that jobs number, 75 is a lock, just a lock. What do you think of a new real estate agent and how hard it is going to be for an agent getting their license in the next month or so? I think getting your license is extremely easy. I did it, didn't even study. I was shocked that I passed. It was crazy. I really did not expect to pass. This was a couple of years ago, so whatever. I actually have a very probably shocking opinion on this. I think starting your real estate career today actually would be amazing, because you're going to be jumping into a changing environment. You're going to have to cut your teeth. If jumping into a market today and fighting it out for the next 2 years is probably going to make you an amazing agent. Now, you're not going to get paid a lot. You're going to struggle. You're going to live on ramen noodles. But again, real estate is an amazing career where you can make amazing money and you can help people. It's amazing. I think getting in today, knowing it's going to be hard and willing to eat ramen noodles for 2 years, I think it's going to be fun. The people I feel bad for, Randy, dude, if you were a new agent in 2020, Oh my God, if you were brand new agent in 2020 or 2021, you walked into the best market ever. You have been spoiled. You have no good habits. You're lazy. You think money rains down from the heavens. The people I feel bad for, Randy, are the people that got in 2020. I think today, if you go in with the right expectations, it's actually not too bad. Yep, this is a 100 surprise Paul V live stream. Stephen Dow actually texted me right before we were going to talk that he was feeling bad. So yeah, we did this. Yeah. The 15 Conversations with Real Estate Millionaires absolutely is still available. It is on Amazon. In my opinion, it's actually more valuable than one rental at a time. And maybe that's selfish, right? One rental at a time, my first book that's got almost 1,000 reviews, it was written for me. If you read the book, it was me kind of living 20 years. 15 Conversations with Millionaires was written for you. I thought I was trying to write a second book for a year. And it wasn't until I said, what do my audience need? Yeah, one rental at a time is great for full-time employees, MLS, 15 years. Great, perfect. But that is such a small part of the market. 15 Conversations with Millionaires has wholesalers, flippers, Burr. It has a lady, the most meaningful chapter to me was a lady who was 75 years old talking about what it's like to unwind a portfolio. There are 15 conversations in that book. I do not believe any of you will like all 15 stories. That's not the goal. The goal is for you to read all 15 stories and find the 3 that you will reread every month, every 3 months. Because what I found during the first 5 years of my journey is I needed something to hold on to, because freaking financial freedom is hard with real estate. It takes time. Recycling capital, income snowball. So I wrote my second book for you. And you can find a link to Amazon below all of my videos, or you can just find it on Amazon. So absolutely still available. I'm actually shocked that it doesn't sell more, frankly, but it's okay. I wrote it with all the good intentions, and I'm happy with it. Thank you for your work. You're very welcome. Cool. Thank you, Norma. Sorry. What would a solid alternative be for marketing name for Matt the Lumberjack Landlord channel? I'm thinking Journey to FI. Yeah, I don't know. Again, I think that's a real thing. I think he needs to change the channel. He can still be the Lumberjack. He can still use the bobblehead, all that stuff. I just think he needs a more, frankly, YouTube algorithm friendly, because I think he's missing out on helping people. I don't know. I think there's been a lot of good names in the comments, but I don't know. But he and I had a heart-to-heart conversation about a week ago. I'm like, dude, it's time. Thoughts on novation agreements for fix and flips? I know there's a lot of people talking about them now. I have never done one, so I have no opinion. I believe novations is something that Pace Morby's talking about. I think it is something that others have brought up as well. I'm very clear. I stay in my lane. I need to learn a lot of stuff. I think creative financing is going to be the wave of the next 2 years, and I have a lot of things to learn. So I do not know. If you asked me to define what a novation is, I couldn't even do that. So again, Angel, I don't know. I like a lot of you, real estate is a lot of things, and I'm good at one piece. I have more to learn. Do I have experience with renting to travel nurses? I do not. I have a bunch of money saved, but can't decide if I should buy a primary resident with my wife and continue renting and keep buying rental properties at cash flow. Dude. Sorry, can't help. Happy wife, happy life. I can tell you we decided to buy on purpose. Again, if you know my story, we bought a house. It's not even a house, it's a condo. We bought something below what we could afford, but the agreement was we would live there for at least 15 years. And we've been there 20. When we made that decision, what we basically agreed on is we were going to live there until Teresa graduated high school. She was in kindergarten. And that was okay. We were not going to trade up. Where people got wrong was they always traded up. We had a heartfelt discussion. I think we got in for 5% down, or maybe it was 10%. I don't remember. It was a long time ago. But yeah, if you're going to be in your house for 20 years, Daniel, there's nothing like owning your own home. I don't know. I'm not sure if that's what you wanted to hear or not. But if your idea of buying a home and you're only going to be there a couple of years because you're still wandering around this great world, probably not a great idea. But yeah, I don't know your situation. I have an opportunity to purchase 2 quads and 1 duplex for $300,000. Cool. In Richmond, Indiana, small market, low income. Good idea or bad idea? Withdraw 25 down payment from my 1K. I'm 41. No idea. Again, don't know what the average yield is in Richmond. For all I know, this is a bad deal. I don't know make ready costs. I don't know your expected yield. Jason, none of this matters until we know what the average yield is in Richmond. So if the average yield in Richmond is 8%, and I'm making these up, completely making these up. If the average yield is 8 and this deal produces 20, probably not, probably okay. But if an average yield is 8 and this is a 6, no chance in hell. It all boils down. None of these questions matter until you can tell me what an average deal is. It's that simple. I don't care how many units. Bigger is better is not true. Seller financing always is not always good. Go learn average and only do great deals the next 2 years. It's that simple. It's that simple. All right, folks, I apologize once again. We could not get to all of the questions, but thank you for being with me for an hour. I need to get ready for my 9 o'clock. So take care of yourself. Have an amazing day. It is the weekend. Remember, if you want to buy my course today so you can join the deep dive tomorrow, I will send you the invite. If not, and money's tight, no worries. I will load it sometime, probably over the weekend. So you could just look for it in the deep dive playlist. Take care. Bye-bye.